It's good to have you back.
Thank you for having me back.
Well, let's hear your perspective. We're seeing inflation very low now, and the MPC, or the Bank of Ghana, believes that before or by year end, it could hit its 8% inflation target. What are your thoughts?
As I was saying, I think that, yes, the policy cut was really expected for some of us. If you look at the inflation expectation as against the growth, you realize that in the report they stated that economic growth actually slowed, though there's so consumer confidence and business confidence, but growth being threatened, and you have inflation going. The best way to cushion growth is to reduce your interest so that people will have access to credit and use it for businesses. And I think that the cut for me yesterday was a very good one for the Ghanaian economy.
So are you saying that we're really this time going to see lower borrowing costs that will be enough to boost economic growth?
Yes, as a policy, or maybe in a theoretical sense, we see the policy rate to be a guide to manipulate interest rates in the economy. But yes, we found empirical evidence not supporting the connection, or there's a disconnection between the policy rate and the lending rate that the commercial bank has been giving to their customers. With that in mind, the Bank of Ghana, I think about April 4th thereabout, came out with a new way of calculating the base rate for banks, which is now called the Ghana reference rate. Now, with the Ghana reference rate, one of the key variables that is being used to calculate that is this policy rate. And also inflation also in there. If you have this variable going down, then you should expect that since the Ghana reference rate will go down, you expect interest rate in general, bank to follow suit, and for interest rate in general to come down. And that's what Ghanaians are expecting.
Collins, about the review to those rates, the base rate. I've heard some Ghanaian economists complain that the CBN, or rather the BOG, didn't give banks enough time to adjust before bringing down the headline rates, and they believe that could have a negative effect on the banks. What is your perspective?
I think I beg to differ on that, in the sense that I think when it comes to giving the general rate, the treasurers of the banks were given enough time to assess and critique, the model that was proposed. Even those of us in the savings and loans who were rather complaining that we did not get time. But if you look at it, this is market indicative rate. Okay, it has nothing to do with your cost of operation. It has nothing to do with your source of funding. At the end of the day, the risk premium that you put in terms of lending against this rate will determine how efficient you are as a bank. And that's what some of us are really happy. It's actually going to portray or to show to Ghanaian economy those banks that are efficient and those banks that are not efficient. And we, as Services Integrity, which is a military bank, we believe that efficiency is our hallmark, and it will be able to let us stand clearly, on the market. And therefore, with that, if you're efficient, people will prefer to do business with you. So yes, you might have, in quote, those people from inefficient, businesses complaining about the direction of the policy. But as I stated yesterday to another station, that I think empirical evidence will show by the end of the year if people have really alluded to the fact that policy is a good one or not. We will stand to see.
Okay, now this year is a year that the $918 million credit deal with the IMF will come to an end. According to the BOG governor, domestic debt has fallen from 69.8% of GDP at the end of 2017, now stands at 60% at the end of February. That's according to the BOG governor. Going forward, do you see this falling even lower?
I think policy, our debt management has been one of the difficulty that most politicians that have come to power have been struggling in solving. Yes, we might want to give some small credit, in quote. That's why I say small credit to this current government. If you realize the report that came, most of the economic fundamentals are now in line with the budget expectation. If you have your economic fundamentals in line with your budget expectation, then it means that, yes, you know what you are doing. And in terms of the deficit, my only problem is that you could see the foreign debt, is more higher than the domestic debt. That tells you that in the long run, you are likely to have a currency with it. Because if you have most of your foreign debt, being in foreign currency, and your domestic debt, which is the local currency, is smaller, you need the dollar or you need a foreign currency to go and pay those debts. And that's where I have a problem, with the report that came back. I think the economic managers have to take a critical look at how they manage the domestic debt as against the foreign one.